Hello, my name is Andrew Breiter-Wu. I am the President and Investment Manager of Brighter Planet Properties. I'm here in my backyard, so pardon the sound of birds and cars and general people in their backyards on a Friday afternoon. Well, the reason I wanted to talk to YouTube and all of our followers is to discuss Nikola. If you watch CNBC, if you watch any type of Bloomberg or even the general mainstream news, you've heard of Nikola. And they actually, they're quite controversial. It could become the new Tesla, which many investors think this is like the beginning of jumping into a new Tesla. But I have some comments on that. We have Trevor Milton, their outspoken, boisterous CEO, saying that we are as valuable as Ford. Still have more things to say about that. And then, is it all Elon Musky type of hype? Or is it real? Can he actually do what he thinks he can do? What the plan and what the mission, what he's told investors he can achieve? Or is it all hype? And is he leveraging the Elon Musky type of hype and using that to fuel the funds coming into the business, fuel the investments, so that he can make his vision a reality? It really comes down to, it can either be the future of Tesla, it could be a future Tesla, or a future Enron. And I don't want to jump the gun saying that, but there is a possibility of either way. And don't hate me. I'm not trying to short you. I'm not trying to hate on Nikola. I want to be clear that there's two ways this can all go, and it's all about execution, execution, execution. I do have to, before I dig into this too much, I have to provide some disclosures, or some very important people will kill me. Just kidding. One disclosure is that I own stock in both Tesla and Nikola, so I do need to be clear that none of this is investor advice. I am just digging into the company, talking about it. This is purely for entertainment purposes or informational purposes if you want to read it and watch it, but I am not giving investor advice, just to be absolutely clear. Alright, so the company began trading June 4th after a reverse merger with Vector-IQ, which is a publicly traded special purpose acquisition company headed by former vice chairman of General Motors, Stephen Gursky. And as they went public, and before leading up into the roadshow, speculative traders began betting big that Tesla won't be the only successful future name of the inventor, Nikola Tesla. And I'm sure there's already some animosity between Tesla, the company, and Nikola, the company. And I don't know, if you like football, it's kind of like watching football between the two of them. They haven't gone head on, they haven't started adding each other on Twitter, but only time will tell. The company began trading on June 4th after that reverse merger, and it's an interesting move that they made. The company raised over $700 million through this reverse merger, as well as from Fidelity Investments, or Fidelity Management and Research Company, and Jeff Ubben's Value Act Spring Fund. And when he was on what was it? I think it was Squawk on the Street with David Faber last week, he stated, here's a quote from Trevor Milton, their CEO: "We have a lot of money in our account. We have no debt, but no doubt we're going to have to raise more money." Milton said last week on CNBC's Squawk on the Street, this is all from CNBC, that will come down the road once we hit benchmarks. And then investors, are like, once we know you've hit your benchmarks, they just open up their pocketbooks, according to Trevor Milton. And then at that point, it's all execution. Well, it's all execution right now. And they really are right on the edge, end quote, sorry. So, with IPOs, we've seen startups, we've seen companies try breaking out of the conventional norms of a typical IPO. And what Trevor used was a SPAC, or SPAC, Special Purpose Acquisition Company, was used in this reverse merger type of structure for their IPO. And essentially what happens is someone creates a shell company, and then the head of that shell company goes to market, and that shell company acquires a company. And Vector-IQ was that company that acquired Nikola, put $700 million on their balance sheet, and then listed the company. One factor that we have to think of, though, is that we're not trading 100% of Nikola. We're trading 10%. Everyone's going gangbusters for 10% of the company. I mean, it's no small amount, but what happens to the other 90% once the lockup ends? I mean, the other 90% of investors, once they are at their liberty of deciding on what they want to do, they might cash out. They may have never expected zero revenue company being worth, what, I think this is Friday, June 12th, after the market closed about 24 minutes ago, and they closed on a market cap of $23.1 billion with zero revenue as a company. I'll get to that, but there are alarm bells going off in my head. There are concerns. There are challenges that I have with the company, but we'll dig into that. And I really am curious when that lockup period ends and the remaining shareholders decide what to do, what will happen? That will dramatically impact what their shares look like on the public market. So let's dig into kind of an overview of the business model. They have learned from the hydrogen fathers of our past, the companies that came in with a lot of hype and a lot of excitement about what hydrogen would look like in the United States, in Germany, in Oslo, across our globe. There's been a lot of hype for decades, actually. I mean, people felt that hydrogen is the future of our energy economy, and no one more than in Europe. I mean, the Europeans have been implementing it, have been researching it, and really are the forefathers of hydrogen itself. And what Nikola established their business model to look like is they don't want to be only hydrogen manufacturers. They don't want to just produce hydrogen fuel and not have a end off-taker or buyer of the hydrogen. But they don't want to just be hydrogen truck producers and then not have the infrastructure in place to fuel those hydrogen trucks. So what they did was they vertically integrated. They are a truck manufacturer, they are a leasing company leasing the trucks, and they're developing hydrogen generation facilities where they have electrolysis. They ideally will get to a point with green hydrogen being produced on site with solar and energy that has an affordable levelized cost of energy. And this leasing structure is really where they're not making money immediately when they sell a truck, but it's about the long term, in 7-year increments, 7, 14, 21 years of a truck's life is where they are hoping to recoup their income and make money off of the lease income. The challenge is you don't get immediate cash flow. You're not selling a truck. You're not like a Tesla where you're selling a semi or selling a vehicle and getting cash. Cash is king in a lot of businesses, but they're looking at cash every month, every quarter. It's their business model, and I think it makes sense to be able to feel that vertically integrated. So I get where they're going with that. Okay, so I mentioned some concerns, some reservations. I think most of the clean tech space looks at this. We are happy to, at IPO day, applaud and say, congrats, we have another clean tech company on the market. Internally, we all need more clean tech companies in the market getting our word out there. But many of the prudent investors, many of the firms, especially like ours too, but many of the companies out there, they have reservations just like myself. And I'm going to go over some of that. Uh, they won't be making money. They aren't making money, they haven't made money, and they won't be making money until 2023. That is a long time. And the reason behind that is once the fuel cell trucks are complete, they're manufactured, once you have the charging stations developed and operational, that's when they finally make money. But they have to develop the full fleet. They have to develop the full charging station, which they raised what, 700 million, almost a billion, and they need billions of dollars to achieve this full spread across the country along major highways charging network to produce hydrogen and develop all of those stations, develop the trucks, sell the truck, or sell the leases for the trucks, and there's just a lot of execution. And as I said earlier, it's execution, execution, execution. And their argument is that while we are very focused on electrifying our transportation grid, which is important, is essential, it's where we're going, and will be part of this COVID-19 reemergence and how we start to get out of this situation that we're in, economic situation we're in, that they feel that when you compare, say, I don't know, an electric semi, possibly produced from Tesla, and you compare that to a hydrogen semi, and the cost of both operating a semi, the weight of the actual battery on an electric battery semi is heavy, and weight is what makes transportation cost more. You spend more on fuel, you have more factors in place, but what they're saying is we've got hydrogen. Hydrogen is super light, and by being able to not only be solely about lithium-ion batteries pulling semis for medium durations, you can have hydrogen semis go for long durations, be lighter and competitive, and the overall cost per mile is less than diesel and lithium-ion. They are, as a company, producing lithium-ion batteries. They are producing lithium-ion trucks, not batteries, trucks, and they're going an electric route. I think that's more of a short-term route so they can get some revenue, some money moving into the company, which is great. But that starts to get them competing with Tesla. I mean, there's a rivalry that's it's building up. There's more and more of this tension is building. We had Elon send an email to the team that we're ramping up the semis. We are going to kick butt. In a paraphrase type of setting, but the next factor that they really, in their investor documentations with the SEC and with investors and in the media, they hype up $10 billion in reservations. We have $10 billion in reservations for their semis. And then all of it, I think there was about $100 million were non-binding down payments, but everyone else, I can go, I have the page right here. I haven't done it, I'm not going to do it right now, but I can pull up the reservation page. I can go in, and as we speak, because I just want proof of point, I'm not going to share my screen or anything, but starting at to be determined, I can go with a Nikola 1 sleeper cab, which I know a lot of semi-drivers, I know a lot of people that are on the road, road warriors. They want a sleeper cab. They want to make sure they have a bed in the back, they have their microwave, they've got a setup, they're comfortable. I can go in, get 10 sleeper cabs, hit reserve now, $0, and not knowing what I'm going to pay for it. I'm just saying, it's easy to get 10 billion in reservations. I wouldn't use this as a metric. If I were him, I would not be saying, oh, we've got 10 million reservations. People are going gangbusters on buying Nikola. I would say, try collecting a deposit. He did collect a deposit and gave it all back. Collect a deposit, at least you're making some money. Make some revenue. Like, why, I'm sure there's a reason behind why he gave it back, but why give it back? Okay, I'm sorry. The stock has got me going. So, another concern. They have not produced anything. They have a really good graphic design department, but I need Trevor to prove to me that they are not just a graphic design company, that they actually are a manufacturing OEM. And if you look at like some of these mock-ups, I think this one's the European model of their semi. There's a mock-up with the Anheuser-Busch semi mock-up. So there are some mock-ups that are really they're exciting to see these graphics. We've got his Badger it's his rival to the semi truck, or not the semi truck, the pickup truck from Tesla, the Cybertruck, and he wants to be more of a pickup looking truck. Interesting. I mean, there is a rival. I feel this tension coming. I mean, there's a lot going on. This is Trevor Milton, their CEO. Very boisterous, very loud, very proud, which is important. I mean, of course, you're running a company. You need to believe in the company that you're running and operating, so I get it. But there is a point where you have to shut off. Like, of course, after you're done with this media hype after the IPO, shut it off and go work, go live and sleep in the facility, go make it happen. And yeah, he's got a family now, and I think he needs to figure out a way to make his big plan, big vision happen. And I have a right to be skeptical. And don't call me a bull. Don't call me a bear. Call me a skeptical supporter. Because if he can make this happen, it's going to be amazing. It's going to be absolutely amazing. I need him to prove to us, Trevor, that you're not a graphic design company producing beautiful graphics, and that you actually can produce vehicles. Drive one out, do a big show, do something, drive one out to us, show us, and I think you will be in a great position that we can do C1 being made that can be driven. So that's my challenge to you, Trevor, if you're watching. Other factor, they're assuming 100% utilization of their charging stations. So they're saying that these charging stations will have lines behind them of semis, one after another, ready to charge, and all through the night they're going to keep charging. I know that when you're looking at a gas station, there are some gas stations that were deployed that someone drives up, they pump gas here and there, not 100%. There are some on the major highways that you're driving on 95 on, say, Boston to New York. Yeah, there's all these on the side areas that they get close to 100% utilization. But the companies that are the gas companies, say it's Chevron or Shell, they don't own all the vehicles there, so there's a lot of factors. They fuel the vehicles. Of course, they have relationships with the automotive companies, but apart from that, they're also assuming a 7-year lease cycle that is renewed 3 times per truck. 21 years of leasing a truck back to back. We need, in these financial models, in these projections, you need some buffers. Stuff happens. In the most polite way of saying it possible, stuff happens, and you can't assume it's going to be a perfect world. You can't assume it's going to be 100% perfectly utilized. You better hire a lot of salespeople. Hire some really good salespeople, and don't mess it up. You have to get these vehicles sold, the leases sold. You have to get these charging stations executed. So you better have a good engineering team, better have a good contractors to do the project. Partner up more, which you are. You're proving that you don't want to do it all alone. But that's what I want to see. That's what I want to see on CNBC. I want you to go in and say, I did this, this, and this. So, and then next, your cost of energy. You need 3 cents or below, probably more like 2 cents per kilowatt hour that you're using to fuel the electrolyzers to produce your hydrogen. It's going to be hard in some networks. You're not going to get that in New York. Maybe if you can figure out tapping into the ISO grid, but it's going to be challenging. Okay, so there's an uphill battle. I mean, it's really an uphill battle for you. You're going to need billions of dollars. The market could provide that in debt. If you wanted, I mean, I think a debt-focused approach would actually be the approach I would have taken if I were running your company. But no debt is great to be proud of, but you're going to need to start putting together some securitizations for people that want to own the debt. And then, I don't want, this is not a personal attack or anything to you, Trevor, but there have been a series of companies that have failed. And I don't want to hold that against you. Failures are important in the entrepreneurial cycle. So I think it's important if you learned your lesson and you're able to learn from them, lick your wounds, and execute. If you can do that, bravo. I am on your side. I am supporting. But please, you've gone this far. Do not make Nikola a failed company of yours, please, because I want you to make this happen. And as even you've got me, you've got our team at Breiter-Wu Properties skeptical, but also we want you to make it happen. And it's the last concern point. I mentioned this. They ended, this is Friday, June 12th, again, just to reiterate, and $23.1 billion valuation, market cap valuation. Wow. But you haven't made any money. And you look at, if you watch Shark Tank, you watch other shows, they want to see, you don't want to hear anything about pre-money valuation. I haven't seen a commentary from Kevin O'Leary or Mark Cuban and some of the other sharks. I haven't heard it. It might be out there, haven't watched it, but there are concerns, and a lot of companies like to value a company based off of cash flow. So that is a concern of mine. That's where yes, you released info on Monday about the Badger truck, and your established OEM partnerships, and there's been a lot of up. It's been a great week for you. Your personal net worth, Trevor, has skyrocketed, and great, but execution. I'm going to keep repeating that because that's such an important trend in this stock breakdown or whatever you want to call this. But these are comments, these are opinions, these are my viewpoints, just so that I can share with the world, so that you can get a sense of where I'm coming from. And then it's pardon it, but I'm just thinking, when you think of a company that we're in 2020, I understand it's project finance. So I understand our company, Breiter-Wu Properties, invests into solar assets and large utility scale projects that take 12, 18, 24 plus months to develop. So it's an interesting approach to the market. So that's why I understand why going public, you need to raise money. I understand why you don't have revenue on the overall project, large capital expenditure side for your company. But I don't know, was it too early to go public? Could you have taken on the debt? Could you have taken on a big amount of debt, made the vision happen, and then gone public and cleared up some of the debt? That could have been very well possible. It was a path that wasn't taken, but possible, and it could have been an approach that would have worked. But I also have to bring in Tesla. I always have to bring them in. They're going to be compared apples to apples, apples to oranges, however you want to call it. But Tesla is yet to turn out a profit, but they are making money. They have deposit income. They have revenue coming into the company. So when you compare the two, you've got a company that makes money. You have a company that Tesla makes money. It's a big business, still has a lot of work to do, but Elon has proved that he can execute. From SpaceX to Tesla to all of his other companies, we watched a couple weeks ago. He shot humans up into the International Space Station. He made history. Private space shuttle, or we're not gonna call it shuttle, but a private rocket sending people up to the moon. Not moon, space station. Sorry, and we have Trevor. And I hope you can do this. I hope you can make it happen. My final thoughts are, we have to grab the popcorn, we have to grab the butter, and sit back, and we have to think, how is it going to go? How is all of this going to happen? Let's read the SEC disclosures closely. I'm a geek where I love reading SEC disclosures of all companies, and it just gives me some extra insight to the company. And I think we just have to sit back, wait, and I will not tell you what to do with the stock because I am not providing investment advice. I am here for information, again, just to reiterate, and sit back and let's see what happens. Well, that is my commentary on the Nikola stock. Congratulations, Nikola's team. Congratulations, Trevor. Bravo, you IPO'd. Now let's get some stuff done, alright? Take care, everyone. And I do have to say, before I close, I am a hydrogen bull. I am bullish on hydrogen, bullish on technology, but will not state if I'm bullish on Nikola. So